Well, we have seen a bit of carnage in global markets over the last couple of days, rather on Friday as well as on Monday, and that has continued obviously Monday this week as well as how Tuesday has opened. Well, Wall Street saw steep sell off with all three indices falling over 2% each. Amid, of course, Russia's invasion of Ukraine as well as how the geopolitical tensions are shaping up. Investors are also worried about the surging oil prices and, of course, slowing growth along with it. Now, the ceasefire was enabled by Russia to allow evacuation, but what reports suggest is that evacuation is only to Russia and Belarus, and that has kind of, in fact, reduced or rather hampered global investor sentiment. And when we look at other commentary, well, the Secretary of State in the US said that allies are also looking to ban Russian oil imports. So that will mean that Russian crude will not be imported, which will impact crude prices even further, accentuating the pain, especially that investors are already looking at in terms of increasing oil prices. And of course, that will increase the risk of both inflation as well as stagflation, given the amount of currency which has already been printed largely due to COVID. The Dow fell 2.4% to kickstart the week. The S&P 500 was down 2.95%, almost 3% down. That's the worst day it's seen since October of 2020. And the Nasdaq was down 3.62% at close on Monday. So all three indices pretty much in carnage. Europe didn't look too different either, but slightly more tempered in comparison to its US counterparts. The DAX was down almost 2%. The FTSE was down 0.4%. The CAC 40 was down 1.3%, and the Stock 600 was down around 1.1% in trade on Monday to start the week off. The Asian indices too were broadly or rather largely in the red. In fact, the Nikkei as well as the Hang Seng was down. Hang Seng was down 3.9%, Nikkei was down 2.9%. So sharply lower. The Shanghai was down a more tempered 2.1%, but the ASX down 1% and the Kospi down 2.3% as well yesterday in trade. When we look at how it started off today, well, the Qs look equally negative despite that really steep fall yesterday. Today too, all indices pretty much looking in the red, with the Nikkei down around 1/3%, the Shanghai is down 1%, and the Kospi is down around 2/3%. Broadly, that's how it's looking in early trade today. When we look at the SGX Nifty, that's lower as well. It's around 2/3% lower as we speak. So we're looking at a slightly negative start. In terms of the only positive here, well, it is the S&P 500, Dow and Nasdaq futures, which are looking marginally, extremely marginally in the green, but holding on to that green. So maybe that is some semblance of positivity currently in what is pretty much a red day at the moment as we are seeing it. When we look at commodities, they are in focus and they are expected to continue to be in focus. Oil spiked to $130 a barrel in trade yesterday, which is on Monday as well as Sunday, late Sunday. So when we look at how oil has shaped up, it's at a 13-year high at the moment, and it's currently just below that $120 a barrel mark, especially after those comments by the US Secretary of State, which we did speak about. Gold too is closing in on that $2,000 an ounce mark, clearly showing itself as the hedge in times of need. However, that also signifies that investors are quickly looking at gold as an option versus high risk assets. So there's a high risk asset sell off which is continuing to get accentuated. The dollar index too breached that 99 mark, again accentuating the fact that high risk asset sell off is underway, and treasury yields have risen as well. Given the spike in oil prices and rise in inflation fears, treasury yields have risen, and the US treasury yields are currently very close to that 1.8% mark as we speak. Bitcoin though is just above that $38,000 mark. That looks quite stable after the largest sell-off that we saw yesterday. Broadly, that's how global indices are looking in early trade this Tuesday morning.